Good afternoon, everybody, and welcome to MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. This is closing bell. Quite a momentous day, to say the least in terms of looking at what's going on in Washington. Before I jump into the markets, we saw that the beginning of the repeal and replace of Obamacare has begun. The American Health Care Act was passed through Congress today and now has to get through the Senate, and that's going to be a challenge. They basically have two votes that they are wobbling on potentially in the Senate as far as the Republicans are concerned, but they are taking the glory right now. But the markets didn't bite. As a matter of fact, we continue to see that the markets aren't doing much of anything, in spite of the fact that we're seeing domestically solid earnings, we're seeing decent economic data, and then globally, we're seeing some pretty hot action out of Europe, but it's mixed in Asia, specifically China, as we discussed this morning with the PMI coming in a little bit lower. Now, while people consider these leading indicators, it's a little bit of a stretch sometimes, but at least it gives you some sort of idea, concept, transparency potentially on what could be going on in the forefront. But as you can see from the chart, the markets aren't buying into it. As a matter of fact, if you take a look at the Dow Jones today, it finished basically up, down 6 points at 20,951. This consolidation has been going on since it popped after the initial French election vote, which the final is going to be this weekend. So basically in the next 72 hours, the markets are going to know who is going to be leading France. With that being said, we still see this tight consolidation. And as I had noted this morning, the bulls have to take some sort of conviction at this juncture if we're going to see the upside. With this first step in healthcare, this puts the Senate on notice. If the Senate passes healthcare, this opens up a door very wide for tax reform and potentially meaningful tax reform. Now, I'm not going to get into the ramifications of this new healthcare bill. It does put pressure on the healthcare sector. Take a look at XLV, but specifically hospitals, as well as potentially insurers. Different types are going to come under pressure as well with this passage of the bill. But watch those names. You could see some movement there in XLV, which is the ETF that tracks healthcare. Now, taking a look at the S&P 500, again, a very tight consolidative day, but above that 20-day moving average. And again, for those of you that are new to watching or have never used technical analysis, this is just a picture, give you a concept of what's been going on. We'll also give you these moving averages because it tells you what short-term traders, intermediate-term traders, and long-term traders are thinking about the market as far as price action, supply and demand. And right now, there has been quite a bit of consolidation, but above levels that people have been purchasing beforehand. So you're seeing that there's not a lot of fear, lack of conviction in the market. There's a complacency and really no motivation to move higher or lower at this juncture. The Nasdaq has been consolidative as well. And this is very interesting since we've had some large cap tech names have some pretty significant beats on the earnings side. We've had Apple, we've had Microsoft, just to name a few of the biggies. We continue to see that tech not only has been leading, but has been showing some significant upside potential as far as earnings. But we're not seeing that catalyze the bulls. Finally, the Russell 2000. Now, this has been a different story. After the initial pop that we saw late last week or beginning of last week, basically small caps, these domestically centric stocks have been sliding to the downside. Now, you thought today with the passage of the Healthcare Reform Act in Congress that would catalyze the small cap markets. Now, it did pop it off of its 50-day moving average. As you can see, it tested that red line. That's the 50-day moving average. That was a positive for small caps, but it still is resting on that 20-day. So from a short-term perspective, the bulls are slightly on their heels. And I would say it's more than slightly. They are on their heels. And if these domestically centric stocks, ones that are very sensitive to policies that are right now being debated in Washington, as well as the economic data. Now, we had good claims data today. We've had some mixed data coming out. One notable piece of data, which I'm going to touch on, is the oil storage data. But right now, the Russell 2000 is a point where it's in that area between the 50 and 200-day moving average. That's a battleground. You get a break here on the small caps of 1378, as we had noted this morning. You're going to start to see that could be a potential red flag, not only for small caps, but it could be for the general market. Now, volatility came off of its best levels, but it's at ridiculously low levels. Now you have discussion of volatility being in single digits. This is where you got to watch complacency. And while vol is not high, it does not mean that there aren't those risks. And I'm not talking just about geopolitical risks. I'm talking about just general market risk. We do have an employment number out tomorrow. That could be market moving, and we're going to watch that closely. The dollar continues to slide. The dollar strength was putting some pressure globally, but this pullback has been pretty significant. And as a matter of fact, today the dollar finished at 98.74, down 64 cents. That's on its lows, and the dollar bulls have basically lost their traction that they had started to gain yesterday and finished below their 200-day moving average. You saw also the crude markets. The crude markets actually cratered today. West Texas, the contract that we trade here, is down 4.5%. $2.15. This is something that no one was really looking for. I did note that if you did see crude challenge 49, get through, you're going to see 47 fast. Through 47, you're going to look for 44. 44 looks like a level that I think could hold for quite a bit of time. But that inventory number that came out on Wednesday really kind of shook the market. You saw it started to pull back on Wednesday. You saw a smaller than expected draw, less than 1 million barrels from the storages in Cushing. That's important because, to me, if you start to see that supply is not being drawn down, and we have the highest level of supply that we've had basically when you look at the 5-year average in 5-10 years. Bottom line is that might be a good indication that demand isn't there. If demand isn't there, folks, where are the growth components here? And then what's going to stimulate that? So if that's not happening now, you could see some profit taking. Bonds, though, that safe haven, they continue to sell off. Prices are going down. So if you were getting a little bit worried about the markets getting weak, bonds would have stayed firm, and they didn't. They pulled off in price. You saw the 10-year yield, as a matter of fact, we'll bring it up, got to 2.36%. As a matter of fact, I believe it finished right off of that at 2.35%. So you've seen the 10-year popped in yield. That's going to be a positive for areas that are sensitive to interest rates, specifically watch financials. XLF today, let's take a look. XLF is the ETF that tracks the finance sector. Finished up in the green, ever so slightly, up 0.17% at 23.88. But this is going to be a positive if we start to see rates moving to the upside for the finance sector. In general, folks, you're starting to see that the market is stuck. And right now, they're looking for a catalyst in either direction. And that catalyst could come in the form of the jobs report tomorrow. Watch the unemployment number. We'll see how that impacts the major markets. Also, we're going to be watching very closely. Japan's going to be back online overnight. Let's see how the Japanese markets are reacting to all of this action now that they're going to be open on Friday. Also, the Chinese markets. There's been some weakness there, and that has put the market in general on notice. But boy, I'll tell you, Europe is very hot, and Europe's a spot that people have been putting money to work. Their valuations are pretty cheap. So again, join us tomorrow morning. We're going to start at 8:30 Eastern time. That will be looking at the Asian markets. Then at 8:45 Eastern time, we're going to take a look at Europe. And then at 9:30 Eastern, we're going to take a look at the U.S. markets and see what's going on this first week in May. Let's see if we get a little action here going into the first week of trading in May. I don't know. All right, folks, that's it right now for MarketStream.live. I will see you bright and early tomorrow morning. Thanks for watching.